Welcome back. In the past weeks, Nigeria has taken some bold steps in economic reforms. There was the removal of fuel subsidy and unification of exchange rates, all in a bid to get the country back on an inclusive growth trajectory. These steps have been commended by the international community. However, factors such as high inflation and interest rates still hold sway. John Ashburn, global economist, emerging markets, Fitch Solutions, joins me now. Good afternoon, John. It's good to have you on the show again.
Good afternoon.
Now, the World Bank has upwardly revised Nigeria's expected GDP growth for 2023 from 2.8% to 3.3%, and this comes as from the reforms that the current government has undertaken. However, how do you see the expected increase in inflation that is that's projected to be high to impact the overall economic outlook for Nigeria?
Well, it's an important question. In the short run, it will certainly be painful. So if you look at any numbers that we have available, it's clear, of course, and everyone watching this will know this, that fuel prices have risen very substantially already. They'll probably continue to, if not rise further, then remain a lot higher than they were earlier this year. The exchange rate, of course, has also pushed up the price of some imports. So clearly the push factors on inflation are strong and strengthening. So inflation was at 22% in May. It will certainly be higher than that over the coming months. It wouldn't surprise me if it goes towards 30% as we come towards the middle and the end of the year. So that's going to be a big shock to the economy, a big hit, unfortunately, to consumers yet again. But even so, I think I'd agree with the World Bank view there, which is that this is a difficult, a painful process, but on the longer term, it is moving things in the right direction, and it does create reasons for optimism about the economy as a whole.
Well, still on inflation, we're saying that the U.S. is expected to raise interest rates. That's what some experts are expecting when it meets later this month. Can you tell us how much of an impact this possible rate hike, if they do raise rates, will have on Nigeria, especially amid this current Naira float that we're operating now?
Certainly. I mean, as you say, that is the expectation of most economists. That's the expectation of us here at Fitch Solutions. That the rate will be raised by another 50 basis points, another half a percentage point. The actual effect on Nigeria itself probably won't be all that strong. It will put a bit more pressure on the Naira. But to be honest, I think the factors really moving the currency in the next few weeks are going to be more driven by oil prices, by inflation within Nigeria, and by global pressure. So it will add a bit of pressure to the Naira, perhaps weaken it a bit against the US dollar. But as a whole, I think it will probably not be one of the key concerns for the economy as we go forward into the middle and the later part of 2023.
So what projections are you at Fitch Solutions making for Nigeria? What do you see? Do you agree with the World Bank? You did say you agree with the World Bank, but what are your own projections for Nigeria, especially?
So our forecast for 2023 is still at 2.8. So we're a little bit less optimistic, but I'd say the risks are certainly that we're being too pessimistic there, that things go up. And I'd say that we certainly think the growth will pick up next year. So we're very optimistic about growth in 2024, growth of 3.6%, maybe even 4%. So I think where we might have any kind of disagreement with the World Bank is more on timing than on direction. So it's certainly the case that Nigeria's economy will accelerate over the coming months. I think the question is whether that happens in the latter part of this year or if it doesn't happen until we get into the earlier part of 2024. But the direction of travel, I think we're all agreed that things are probably moving in a much stronger direction than they were a few months ago.
Okay, so Nigeria has just gotten, the approval. We've gotten a new loan from the World Bank to the tune of $800 million. How do you see this? Do you see Nigeria avoiding a debt trap here, or do you see us ending up in one?
Well, the debt issue is obviously very, very troubling in Nigeria. The problem that the country is facing with debt payments exceeding federal revenues in many cases is obviously very worrying. There are a few countries in the world where that's true. It's not a good group to be in. One thing I'd say positively is that the removal of the fuel subsidy opens up a lot of opportunities for the federal government. So that removal is going to save the government something along the lines of 3 to 4 trillion naira that would have otherwise been spent on the subsidy that now can be spent on something else. That's money that can be redirected, hopefully some of it towards social programs for individuals. It can be directed towards investments in capital spending. It will also reduce the amount the government needs to borrow. So the debt situation in Nigeria is obviously very delicate, and that's something we'll be looking at with great seriousness over the coming years. But I'd say that the biggest decision the government's made so far, which is on the fuel subsidy, is a step in the right direction and does free up some money in a way that will make the federal government's budget process a bit easier as we go into 2024. So there is progress there, but you're absolutely right to say, in a delicate position, and even in the best of circumstances, Nigeria's fiscal position in 2024 and 2025 will still be very difficult. There'll still be high debt payments. We're hopefully seeing a situation in which the situation improves, but this will be a slow, gradual turnaround.
Thank you so much, John Ashburn, global economist, emerging markets, Fitch Solutions, for sharing those insights on the program.
Thank you for having me.